Investing in land, that's a little bit different than what I do, but man, is that ever becoming popular. And our guest today is an expert in land and land development. And that's what we'll be talking about today on the Sub2 Deals Show. Hey, deed grabbers, welcome to this episode of the Sub2 Deals Show, where we talk about all things subject to. Now, occasionally we'll talk about other real estate investing topics. It's always something to help you with your real estate investing business. Hey, if you're listening to us on Apple or Google Podcast or any of those other regular podcast doodads out there, we'd like to encourage you to head over to our YouTube channel. We do podcast videos. And we also do regular videos and shorts all the time. We've probably got 1,000 videos over there by now. So it's a lot of stuff for you to watch. So go over there and check that out. It's sub2tv.com. That's sub2tv.com. And we're winding down toward our launch date for my new book, Just Buy a House Already. If you're a procrastinator, if you've said for years you were going to get involved in real estate investing, this book was written for you. Man, we're just a few weeks away from 2026. What will that year be any different from the previous years? Well, get out there, buy some houses, and your life will change a bunch. So go to justbuyahouse.com. That's justbuyahouse.com and get our new book. We got a ton of bonuses if you get it on the pre-launch. Now, the launch date is December 20th. So go over there and check that out. I think that'll get you started and help you a bunch. Guys, today we're talking about land development. And land has been a big deal for the last few years. A lot of people came in and said, well, the single family, the commercial stuff is saturated. It's a red ocean. And we want to be in a blue ocean where not a lot of people are operating. So flipping land, doing land development, that's become really popular now. Our guest today is Brandon Cobb. Brandon is the owner of Land Development Accelerator. He was a former medical device sales rep before becoming a land manager in development. And Brandon and his company manage over $22 million a year in land development projects. That's pretty impressive. So we wanted to bring him on to talk to you guys about land development, how it works, and how you can get started. So Brandon, welcome to the Sub2 Deals Show.
Oh, man, I'm excited to be here. Thanks for having me, Will.
Yeah, we're glad to have you. Well, listen, tell everybody a little bit about Brandon, how he got started in real estate. That's always an interesting story. And a little bit about what you do.
Yeah, if you'd told me 10 years ago that we would be inventing these new housing communities, I'd have looked at you like you had 10 heads, right? I never really had a desire to be an entrepreneur. I don't have this story about working in corporate for 20 years and just getting fed up and finally going and pursuing my dream. I'm what you call an actual accidental entrepreneur. See, my journey started when I entered medical device sales because that was my dream job. I was just like any young buck out of college. All you want to do when you're searching for your first career opportunity is make your parents proud, make money. And I thought I had the coolest job in the world. It took me forever, 2 years. 2 years is forever when you're young to break into medical device sales. But once I got in, I thought I had made it. I was wearing scrubs every single day to work. I was getting to rub shoulders with the orthopedic surgeons, train the hospital staff on my product. I was selling something that I actually believed in that was making a difference in the patient's life. I mean, I thought that I hit it out of the park. And I remember it was one of the best days I was ever having as a sales rep. One of those days where you're excited to give your boss like the good news and like, hey, how much money I made you this day. And, you just get all jazzed up as a sales rep, hitting your numbers and getting the attaboys from your boss. And I went to go meet my boss at the Starbucks over on West End. And I'll never forget it. It was a sunny Friday afternoon. You could smell the coffee. It was in June. And it was one of those days like you wanted to just sit outside and hang out. And before I could get the words out of my mouth about how great of a day that I'd had, he fires me.
Oh, wow.
And it took probably 3 hours for the shock to wear off. Like I could hardly speak. And, if anybody's been fired before, especially when it's like a dream job that you work really hard for, you're not just losing a job, you're losing your sense of identity. And I had my sense of identity tied up in being like that successful, driven medical device sales rep. And what made it even worse was my boss was like a mentor to me. He was like a dad, right? Like he's the guy that gave me the opportunity to finally break into this industry that I'd worked so hard to break into. And so just like that, no job, it was all gone. And that's what started my real estate journey. Honestly, I was trying to figure out what I wanted to be in the new identity thing, right? So I started a course on how to break into medical device sales. That flopped. I started an online motivational blog. That flopped. I thought that, I'm really into Tony Robbins and this motivational stuff. Maybe I'll be a life coach. And Will, you're going to be surprised about what I'm going to tell you, but not many people want to take life advice from a 26-year-old. That's not how that flopped too. But then I discovered this amazing vehicle that called real estate. And at first I made all the mistakes. I sold all my retirement accounts, drained my bank accounts to buy my first deal. Didn't have a cash flow figured out. Quickly ran out of money in 3 years. Didn't pay myself. Made all the mistakes you could possibly make. And ran out all my own money and had about $98,000 in credit card debt. And I'm like hitting the wall going, holy crap, what am I going to do? And I joked that that's where the real learning started, when you run out of money and you're put up against a wall. And so that started my journey in real estate. I started flipping houses. We built that business up to doing probably 40 houses a year. And then we started building houses, and that was going really well. And so we started raising private money, and that went really, really well. And, fast forward to today, now we invent new housing neighborhoods.
Yeah, great. I'll tell you that raising private money thing, that I'm sure that got a lot of people's interest right there. And I don't want to deviate at all, but you said that went really well. What was the secret for you to raising private money, do you think?
Oh, this is something that we teach how to do because it's such an important skill. I joke that in real estate, if you're teaching kind of real estate, but not how to raise the money, it becomes very complicated. As you know, a lot of people do hard money loans and it's expensive and you got the monthly pay. You're not going to build a sustainable business that way. Like you need private money where you can get the terms you need. So I had done enough of these deals with these hard money lenders and these borderline loan sharks to realize, okay, in order for me to grow, I can't have $30,000 a month of interest payments,
right?
And I was paying them, a crazy amount of money. They were wanting like 3 points up front and, 13% interest. And come to find out that a lot of my people in my network would love to have a first position loan on a house at 10%. And they didn't need monthly payments. They just wanted to get paid out at closing. Turns out that the stock market and bonds and all that and the interest in your bank account doesn't pay you a whole lot of money. Things can be pretty volatile. So there's a huge need out there for investors to have a part of their portfolio where they have a first position mortgage on the home and they have financed your new build or your house flip or whatever, and they're perfectly happy making 10% after the home sale. So no monthly interest payments, it accumulates and pays out. And boy, when I started doing that, I freed up about $30,000 a month of cash flow. Like that's why I say it was a game changer for me. And here's the real fun part. Doing this, I'd raised probably $4 million and I was having a problem. I was playing Tetris with people's money. So when you have one house that you want to flip or build and you need maybe $350,000, but you have one investor with $300,000, what are you going to do with the other 50? Or maybe you have an investor with $400,000 that he wants to place, but you only got a home for $300,000. So it's like playing Tetris. It was kind of difficult. Right. And you spend so much time gaining people's trust to do the deals and turn in the money, where if you don't keep it busy, you lose it. Yep. And what I discovered, this magic vehicle called a syndication. And when I discovered what a syndication was, I immediately went to the investors. I said, hey, great news. I We're going to do more of the same deals. I can keep all your money busy. And instead of 10%, I'm going to pay you 18%. I'm going to make you partners in the deal. And we're going to use the money as equity to go get financing for the property. And boy, I literally woke up one day and I'd converted about the $4 million from debt into equity because I'd built a lot of trust with these investors. And bank gave me $15 million overnight.
Oh, wow.
So overnight, we went from doing from keeping about $4 million busy to keeping $20 million busy. And that is how we really grew and scale pretty quick. So the syndication is a very powerful vehicle.
Yeah. You know, it's one of life's ironies, isn't it? If you need money, you can't get it from the bank. But if you've got money, they'll fall all over themselves to give it to you. It's really funny how that works. Okay. So now in some of the notes that you sent me, you said you have a story about a time you lost $1 million. And, you know, you don't hear that often in the teaching space where people share a really big loss. Everything is sunshine and rainbows. Nothing bad ever happens. Got to hear your story about the $1 million loss.
Yeah, you know, there's just not as much authenticity out there. And I like to put it out there because especially right now, Will, there's a lot of distress. There's a lot of people suffering. It is rampant out there. I'm very connected in the real estate community. And you can really beat yourself up if you're in real estate and you don't have the Lamborghini or the yacht, or you're following the social media stories. Like it can really get to you. So, you know, I like to put this out there because, you know, I've got the battle scars to show it. So yeah, we had a deal. This is one of our golden rules in our land development program. Again, we started the program, the Land Development Accelerator, because there was not a community out there teaching this stuff. My partner and I had to figure it out ourselves. And one of the golden rules is don't buy the property until you get all the approvals in place. So we thought we were going to be able to get this piece of land approved for a development. Well, it turns out that after buying it, we couldn't, and they didn't allow it. So we thought it was going to be worth a lot more money. But in the end, it didn't happen. So we ended up losing we had $1 million loss. It was a row of townhouses that we were going to do. We didn't have the full civil drawings designed for the community. We were basically going off trust. Oh, we went and spoke with the planning director and some of the council members, and they said they wanted it. Oh, we trust you. We went to the civil engineer. We got a mock design up. And he said, oh, yeah, you know, this is kind of what you're looking at right here. Here's a preliminary plan. And boy, we were just two young guys excited about doing this. And again, we'd built houses before, but we'd never taken land through an approval process from like farm to new community. And we were trustworthy, but we trusted other people. We were very trusting. And well, turns out we didn't get that approval. And it turns out those civil drawings were way more in depth than we thought, you know, and as a result, we ended up taking a 7-figure haircut on that deal. So the golden rule and like what we teach, put the property under contract contingent on getting that approval and buy it after you got the approval.
Yeah. And you know, it's funny when it comes to coaching and teaching and people, and you see people all over the spectrum with that. And you see it a lot on Facebook. I don't pay for coaching. You can learn everything you need on YouTube and all those things. But see, that one lesson that cost you $1 million, now all of your students know that process. They won't ever make that mistake because you'll make sure that they don't. So how many people do you save? Hundreds of thousands of dollars because of an error that you made, and they get to benefit from that.
It's insane. You know, I get deals sent to me at least once a month. I'll tell you probably the biggest mistake that I see. So that's probably the biggest, number one. Number two is new developers will design a piece of land and they just shove as much housing on it as possible. I got one the other day that had 54 townhomes on it. And he's like, hey, look, it's approved. And I looked at it and it was approved. Like he had spent all the money and the year to get it approved and take it through. And come to find out, they were 11-foot wide townhomes. Nobody has an 11-foot wide townhome product. Like if you're going to sell it to a builder, you got to design it where the builder's product fits on it.
Yeah.
And he's not going to be able to sell it. So there's so many mistakes that you can make. I see it all the time. And, it is interesting. A lot of people have this, I'm going to figure it out mentality. And I don't know why, like for whatever reason in the coaching world, and I understand there's some gurus out there and scammy people, but there's a good way of vetting the people who are serious about coaching and good at not. And I can share some of that stuff if you want, but just the cost of tuition is so much. If everybody treated coaching like they treated college, right? You go in, you have a 4-year goal. You consistently show up to class. How much did your degree cost you? Probably 50, 60,000. If we factor in room and board, it's probably what, with food and everything, 6 figures. So people are comfortable going into debt 6 figures and doing something for 4 years to come out making what, $70,000, $80,000 maybe, and then have to pay it off. But people are very hesitant to invest, $10, $15, $20, $25,000 into a coaching program that could potentially free them up and change their life. And then when they buy it, they give it a shot for 6 months and go, "Oh, this doesn't work."
6 months? Wow, that's a long time. I'll tell you, I've had people tell me, "Listen, I've done 2 mailings and I cold called one day and I couldn't get a deal. I mailed 50 postcards and calls for one day and I couldn't get a deal." It's like, listen, it's going to take a little bit more than that probably when you're new.
Yeah. Well, why do you think that is? I'm kind of curious because this is in our culture. It's almost like we're programmed to just go to college and spend the money. Like you don't even think about it. You just assume that's what you have to do. You literally don't even think about it, because if most people sat down and just weighed those 2 things and looked at it for what it actually was, they go, "Holy crap, maybe I really need to rethink this here."
Yeah. That's for sure. I've had that conversation with people many times. The exact scenario that you talked about, they'll go drop 50 grand on the low end on a college education and go take a job making maybe that a year and have a fit over paying $5,000 or $10,000 for something that literally in 30 days, we've had students in 30 days, I'm sure you have, go out, flip a house and make $100,000. I mean, it's just crazy.
Yeah, that's the crazy culture we live in, and I can't wrap my brain around it. But I get the whole sleazy guru stuff. Like those guys definitely are out there; they exist. But if you're gonna vet like a coach, no matter what program you're looking at, just go see if they're actually doing the thing. Right? Like look and see that it does. We invite like our students to come out and fly in and see our projects, walk them, ask questions. Like you want to verify that the guy that you're paying for the advice has actually done the thing that you want to do. If I break my leg, I'm not going to go see a nose doctor.
That's right.
Right. If I want to do Sub2 deals, I'm calling Will. Right. You want to make sure you're going to the right person.
Yeah, for sure. Absolutely. Now, okay, so we know how you lost the $1 million, but then you've got a deal where you made 1.4 million. So how'd that work?
Yeah, that was a lot more fun than losing $1 million, if I'm being honest.
Sure it was.
So this was a deal where we were actually going to build the houses. So we got into this business because we were builders. We were tearing down these houses in the core of Nashville and building like 2 houses in their place. So the city went to these bad areas, completely rezoned it and said, "Hey, like we want to see density here. We want to put money and develop these areas." So that's what we were doing. But we got sick and tired of going to like 20 different job sites. And the light bulb moment went off. We're like, man, we see why these big builders buy these big tracts of land. It's so much easier. What if we could just show up to the same area every day, build the same houses? You get bulk discounting with contractors, with suppliers. Oh my gosh, logistics, you can manage it better. So it just made sense. So we went out and we started meeting with a lot of city officials. And we said, "Hey, look, we're new developers in town. What are some things that developers have done that have created a win-win for you?" Right? What's blowing up your phone, Mr. Planning Director? What are people complaining about? where do you guys want to see density? And that's a step a lot of new developers need to do that they don't, is go pull up a chair on the same side of the table as the city. Get to know them, get to know the community, the council members. What do they want? What do they not want? That's going to help you design a community. So when you bring it to them, they're going to approve it. We did that. And they told us the areas and what their goals were. And we said, okay, we'll be right back. So we started going out, we started sourcing land, and we found some great land, and we brought it to them. And they said, yes, we want this. We will approve a development here. And we were going through the process of putting the roads in. So kind of near, when I use the word development, I think of like all the horizontal construction. So the grading, the utilities, the roads. When I say vertical construction, I mean building the houses. So when we're developing the roads and everything, we got a knock on a door from a national home builder, right? Wall Street funded, publicly traded company. And they said, we really like your land right here. Like, we want to buy it and build the houses. And we said, get lost, not interested. We're building houses. And then they came back and they knocked on our door again. And we said, hey, we'll offer you this for your land. And we said, look, didn't we tell you to get lost? Get out of here. Like, we're not selling you the land. And then they came back again and said, well, what if we offered you this for it? And my partner and I looked at each other, looked at the offer, looked at them and said, yes, you can definitely have it. And do you want the one across the street too? Because we'll sell you that one as well. So we ended up developing, I think it was like 70 home sites for them, and made over $1.4 million on that development.
Nice. Well, I'm curious. I'm sure a lot of people are. When you talk about buying land in bulk like that, most of it's zoned farm or it's rural or whatever, and you have to go through such a process getting all these things approved by the city. So what is the process to get land entitled? And then, gosh, you told us earlier about the deal where you lost $1 million. So I think I've learned one tip there: don't buy it until you've got the approval. But how do you mitigate all the other risks there? Is not getting approved for this thing or that thing? How do you navigate that?
Yeah, that's a great question. So the only time I would buy it is if I could turn around and resell it and make a little bit money or break even, right? So if you buy a piece of agricultural land and the whole thing fails, but you got a really good deal on it and you can sell it still, your downside's mitigated, right? But what we're doing, our value proposition, is we're coming to the landowner saying, hey, we want to go under contract with you for a maximum of 18 months, and we're going to pay you a lot more than what your land is worth. And here's how we're going to do that. So we explain the process to them. Farm to new housing community, the land's worth a lot more money, so we can pay you a lot more money. Will you stick it out with us? And a lot of times they're like, heck yes, right? Because they know the value of their land. So we do a good job of informing them. So here's what we do, and here's how we mitigate risk. People complicate this process. You shouldn't complicate it. Once you got a piece of land under contract and you've underwritten it, you've done your thing, you go get a concept plan done. This is just a sketch of what the development is on paper. So if you got a bird's eye view and you're staring down, it's two-dimensional. It's, hey, here's what we think we can get on here. You can pay a civil engineer to do this. You could even just draw it out yourself, maybe, if you wanted to. And you take that to the planning director or the council, and you just get some feedback on it. And again, if you've already met with them and done that needs assessment and built that relationship and put that name with a face, it's a very easy conversation. And you say, hey, is this something you guys would support, do you think? Now, they're not allowed to tell you, yes, this is a guaranteed for sure, yes, but they'll nod their head and be like, yeah, you should present this, or, we don't like townhomes. Like, I think you'd have more luck doing single family rather than a townhome product here, right? You'll get that feedback. And once you got something that they're kind of winking at you, nodding their head, you go, all right. And then you take it to your builder buyer. So, you got your buyers list. We work with national home builders. We've met with all of them. And we say, hey, city's going to support something like this. Do you want to buy it from us when it's done? And if they say yes, and they offer something that's more than what I have it under contract for, usually $500,000 to $1 million is like the minimum we want to make on a deal. we move forward with that process. And so that's how you mitigate the risk. You lock your builder in during your due diligence periods. If I don't have city support, I don't have a buyer, I don't move forward with that deal. And I get a significant deposit from that builder that will cover my costs if for whatever reason that builder backs out. Like, I'm protected in my BC. I protect my AB contract with the deposit and the down payment with the BC contract. So that alone will mitigate a lot of the risk. And then I can pause right there and go through the whole entitlement process if you want. But
well, I mean, I don't know how much time we got here. I mean, or how long that takes. I mean, man, that sounds like something you teach. That might be a special program that goes through the step-by-step on that. But I mean, if you want to briefly cover, A, B, C, these are the things that you have to do.
Yeah, like we covered A, right? Get the concept plan, line the deal up.
Sure.
B, you submit what's called a preliminary plat. So it is your concept plan, but now you're just going to add a little engineering to it. Like, the city wants to see, okay, how could the stormwater be affected? Okay, where are the utilities going to go? It's just a rough sketch with some civil engineering. And the city will vote on whether or not to pass that preliminary plat, right? And you might go back and forth. They might vote it down and say, hey, we want this, or we need to change this, or you need to do this, and then you'll represent it. But once they vote on it and they pass that preliminary plat, your development is basically happening at that point. Like, they've said, yes, we want this, contingent on us seeing a full civil drawing design. So they want to bless the project and make sure that it's safe for the community. We live in the United States. We take this for granted. If you go to third world countries where city officials are paid off by people and there's corruption, and you see the effect it has on real estate, right? It's bad. We're blessed to be in a country that has these rules and regulations. So think of your local community like this. The city has departments. They've got the fire department. They've got public works. They've got the utility department. They've got zoning. They've got stormwater. The reason they have these departments is to make sure the community's safe. So every development that passes your preliminary plat now needs to be designed. And all the design means is civil drawings. And think of civil drawings as being your blueprint to the ground, right? You hire an architect to create a architectural drawing blueprint of your home, what to do, where the materials are, where it's going to go. Civil drawings are that for the ground. It just shows where the roads are going to go, the utilities, all that. And the city, all the departments that are in charge of making sure the city's safe, they need to bless them. So the fire department needs to make sure that your community is safe. There's a fire hydrant every so far. The public works needs to make sure that the gutters are set up the right way and meet specs. The zoning needs to make sure it's safe. Stormwater needs to make sure it's not going to flood. And once all these departments sign off on your development, you now have an approved development. So that your civil drawings are stamped by the city. They said, yes, we approve it. It then goes to the state, and the state looks at it, and the state will bless it. Here in Tennessee, they do a what's called a SWIP permit, a stormwater prevention plan. The main thing the state wants to see is there's not going to be any flooding problems.
Right.
And once you have that, you can go and pull a grading permit. And that is basically the entitlement process.
Yeah. So is there a sweet spot for if you're out looking for a parcel to buy? Is there a certain number of acres that you're looking for, something that's too much or too small, or is there a sweet spot you're looking for?
So for national home builders, they want big deals. And I like big checks, so I want to go find them big deals. It's not a certain number of acres because the density matters. You might have a whole acre lot and you have 20 acres and you can only put 15 houses on it. Right. Whereas you could have a 5-acre tract that's approved for townhomes and you could have 50 townhomes on it. So it all depends on what the zoning allows that zoning, the higher the density of the zoning, the more units you can put on it, the more valuable it is. But as a rule of thumb, you're probably not a max amount is probably 15 units per acre. And that's a townhome product that's pretty tall and skinny, with not a lot of setbacks. So we typically won't go after the land that's less than 10 acres. We try to aim for 80 units or more because that's what nationals want. They won't touch anything that's usually less than 50 units. So for that reason, 6 acres, if we can do a townhome product on it's what we'll go after. Or if it's a single family, probably 10, 15 acres is kind of minimum.
So if you meet with Farmer Jones tomorrow and you get his 50 acres under contract, what is the normal, and I know they vary depending on what you got going on, but timeline between getting it under contract and selling it to your end buyer with all the approvals and the process? How long does that usually take?
15 months on average. I've had a deal take 18 months with a lot of back and forth. I've also had deals take 10 months. So it helps tremendously if it's already zoned for what you want to do, or it's in a developer-friendly area. That's one of the other reasons why we say go talk to the planning department, go talk to the director, meet some of the council persons, because if they're anti-growth, your job's going to be a little bit harder.
Yeah, for sure. Okay. So what are some of the common mistakes new people getting into land development? What are some of the common mistakes you see the new guys making?
Oh, don't buy it before the approvals.
That's number one. I'm going to remember that one for sure.
Yeah, just don't. Unless you know that you can turn around and just resell it as is and make money or break even like that. That's the exception to the rule. The second is you have to design it with the end buyer in mind. And that's why it's important to line your builder or your buyer up during your due diligence period. Because again, this works for multifamily, single family, industrial. It's the same process to get the approvals as it is for these new communities. So having them lined up, your exit lined up, is another really important piece. I don't want to spend a whole lot of time on a development that I don't have a buyer for, right? I need to design it with the end buyer in mind. The third is, and we kind of talked about this, is make sure that it's a feasible development, right? You're not going to put an 11-foot wide townhome product on it that nobody wants. So that's a big problem that we see, and we see it all the time.
Yeah. So this end buyer, when it sounds like you go after the bigger builders, if you've got a big parcel under contract, you want to find a builder that's going to come in and build 50 houses or whatever the thing allows. Is that a relationship thing? Or if I happen to go out tomorrow, I did this podcast, I'm interested, and I happen to know Farmer Jones wants to sell his stuff, and I go out there and I get it under contract. If I call up D.R. Horton, are they going to be interested? Or are they going, we don't know you?
Oh, so these sales reps that work for these national builders, they're your best friend because they work for the company, but they want the commission, right? It's not their money. It's Wall Street's money. They want to work with you to get the deal done, right? They love those types of phone calls, but they also don't want tire kickers that waste their time, that don't really have a deal. Like, they get a lot of calls like that. They get a lot of pencil pushers, and it's not really a deal. So it's important to go and meet with them if you're new ahead of time. Let them know you're working on some exciting stuff, and there's some information that you need from them, right? I do a Zoom call with them if you're not local. If you're local, go meet them for coffee, right? It helps to have that existing relationship when you do finally get something. And there's some important questions you need to ask them, like, hey, what's a range of development costs that you guys are seeing? Because part of being able to offer the seller something is you have to underwrite an assumed development cost, a per unit development cost. Now, I know what they are in my market because I've been doing this a while and I can ballpark it, but you don't know if you're first starting out. So use the numbers that sales rep gives you, because that sales rep's underwriting deals all day. They're plugging in their development number into that. Just get that number that they're plugging into their development costs. You're going to need that in order to put it into your underwriting model to spit out an offer to your land seller. So they are more than happy to meet with you speak with you, they want deals.
Yeah. So I got a question here, and I know we touched on this before we started recording today. This was something that really, really interested me, and I wanted to hear what you had to say about it. Is the future of land development for affordable housing, which, and listen, there are a lot of people out there doing a lot of stuff right now with tiny homes, with little modular homes and all those things. And I agree. I think with the price of real estate right now, unless there's a major correction, and I don't know how, man, if it corrected what it's appreciated just over the last 3 or 4 years, man, that would be devastating, I think, to the country for sure.
Yeah.
But what do you see happening here in the next few years for affordable housing and land development? I mean, are we going to start seeing more communities that are tiny homes or that sort of thing? What do you think is going to be happening out there?
Yeah, it's never. I saw a chart recently. It might have been earlier this year. It showed the average rent going up on a chart versus the average mortgage. And right now, it has never been more expensive to own a home than rent. I mean, it was crazy to see the gap. And you could kind of go back in time and you could see the times when it cost less to rent than it did to own, and less to own than it did to rent. And it was fascinating to me that we're in a time right now where the gap has never been higher. It's not going away.
Yeah.
Right. You've got a runway. So depending on what study you look at, we're somewhere between 3 and 6 million homes short. Now, that's a lot of houses. And what's happened, Will, is you have 31% of the home buying population, millennials, that are at prime home buying age, right? They're having kids, they're settling down. 31%. That's the amount they make up of the home buying demographic. But only 10% of the homes being built are entry-level housing. And when I say entry-level housing, what I'm referring to is that $2,500 per month or less mortgage. That's about that's the max of what your new first-time home buying family can afford. And so I'm not a genius, but there's severe supply and demand imbalances here. And until we can get AI combined with the humanoid robots to build these houses a lot faster, the supply and demand imbalance is going to stay there, and affordable housing products are going to just continue to be in high demand for the foreseeable future. I don't see how it could slow down. There's too much demand for it.
Yeah, I agree. I mean, I just pulled this up just to be certain. And yeah, the median home price in the US right now is it's over $360,000. And I mean, you can do the calculations on that at 6.5%. I mean, you both got to be working. You got to have pretty decent jobs to be able to even afford a house.
Yeah. Well, what's crazy is, 10 years ago when we were flipping houses, I'd show up to these 3-bed, 1-bath homes that were 800 square feet.
Yeah.
And I mean, they're just a box. And I'm like, why in the world would someone ever want to buy this thing? Like, what in the heck? And if you go look at what the interest rate was in, I think it was like the 70s, it was at like 14, 15%. That was all anybody could afford. The builder was having to build something that they could afford.
Right.
And that was it. An 800 square foot box, 3-bed, 1-bath, with nothing in it. And, this to say, people complain about how unaffordable housing is. It can get a lot worse. If we're starting to see those 800 square foot boxes come back, now things have really taken a turn for the worse.
Well, in a way, they sort of have with this movement to tiny houses. They've tried to make it chic and everything, but the fact is, that's what you can afford now. A lot of times, I know that in 1982, the mortgage interest rate was 18%. People bought houses with negative amortizations. Every month they made a payment, they owed more. That's nuts. So yeah, I don't think it's as bad as it was, but my gosh, I mean, just 5 years ago, the median price of a home was, over 100,000 less. That's pretty substantial growth over the last 4 years. And that's overall in the housing market. But yeah, I mean, just little tiny nothing houses where I live in Northwest Arkansas. Now we're in one of the hottest markets in the country. Like 100 people a day move here for, Walmart's home office, Tyson Chicken, JB Hunt, all those are here. So we have a lot of growth, and just a tiny little nothing house here is $300,000. Crazy.
Yeah, it's tough because you had the crazy inflation from 2022, 2023. That's not going away. A lot of those prices have stuck. You've got interest rates are starting to trickle down, but I don't think we're ever going to see, the crazy low rates that we had. That was, once in a lifetime potential opportunity. It's just not going away. We're still going to need housing. And like I said, until AI combines with the humanoid robots to build these houses, I think we're going to be, stuck where there's a big need for it.
Yeah, we had a builder build right next door to us last year, and I was out there talking with him while he was doing it. And this is, a standard out here, 3-bedroom, 2-bath. That house is a little smaller than ours. I think it's probably 1,500 square feet. And I said, if I wanted you to build this exact house for me, what would it cost? And he said it cost about $350. And I said, okay. So, and this guy rented this house out because, this happened last year, so the market hadn't slowed down quite as much. So the guy's intent was to sell the house when he built it because he was counting on that appreciation to continue, and it didn't continue on the same path. So he wound up renting it, because how do you build a house for $350 and then sell it for $350? I mean, you can't do that. But man, it is just crazy, crazy times. So Brandon, tell everybody about what you teach. And I know your website is learnlanddevelopment.com. You have a free course there that they can get, but tell them about your course and about your coaching.
Yeah, our biggest thing is give away the secrets, sell the implementation. So if you're somebody who's, wanting to take land and get it approved for new housing communities or commercial or multiple, whatever, it's the same process. You can go to that website, learnlanddevelopment.com. It's a great tool to get started, teaches you the basics, the fundamentals. And, if you like the idea of being a part of community of other developers and people that are developing land and building homes and communities, we've got the Land Development Accelerator program. It's a great fit for people that want the hand-holding through the process. There's a whole community. There's a course in that community that comes with all of our resources as well, like the contracts, the checklists, and all that kind of stuff. So it's a great fit for somebody who's like serious about doing it and just likes the idea of having some hand holding along the way.
Yeah. And wants to learn from somebody who's doing this stuff every day. Their last deal wasn't 20 years ago. Right.
Yeah, exactly. Yeah. So, hey, if you're going to pick a coach or a mentor, make sure that they're actually still doing the thing that you're doing, and it wasn't 10 years ago or whatever, because the market changes. Yeah.
Yeah, for sure. All right, man. Well, thanks for coming out and sharing land development with us. It's really pretty interesting. I've always been a single family guy myself, but I can see the potential here, especially with all the opportunities that we're going to have for the affordable housing here in the future. I think that's going to change things a bunch. So, yeah, thanks so much for coming.
Thanks for having me on. It was a pleasure.
All right, great. Thanks. Okay, guys, so that is it for this episode of the Sub2 Deals Show. I'd like to thank Brandon for coming out and talking to us about land development. And listen, if you want to get his free course, go to learnlanddevelopment.com and check it out. Free, everybody's favorite word. Go get your course, check it out, learn more about it, and then talk to him about coaching and about teaching you guys how to get started. So we appreciate him coming out. Listen, you guys get out there, talk to some sellers, and buy some houses.